Some traders call Fibonacci the Holy Grail indicator. Now, I don't believe in magic, but it's crazy to see how accurate price respect these levels when you know how to use them properly. So today in this video, I'll show you how to use your Fibonacci retracement tool so that you can increase the quality of your setups. And if you are new to my channel, my name is Jamark. I've been trading 3 years and a half, going to 4 years now. I've gotten multiple payouts with FTMR with most of the platforms in the industry, but we're not here to talk about my trading stats. We are here to tilt the odds of winning in your favor. So without further ado, let's go ahead and dive right into it. Now, the first thing that I need you to know about Fibonacci is that it's not a magical or a mystical tool that's gonna make you automatically profitable. It's just an important weapon in your trading arsenal. And of course, if you know how to use it, which I'm about to show you right now. So you can only use your Fibonacci retracement tool when price is uptrending, forming higher highs and higher lows, and when price is downtrending, forming lower lows and lower highs. So price is downtrending right here, right? And all we are doing with our Fibonacci retracement tool, we're trying to catch these retracement. We want to know how far price is going to retrace back, like this retracement, so that we can catch the next leg up. That's why I'm telling you, you need to use your Fibonacci when price is only trending. If price is choppy, price is doing this, there is no way to measure this. There is no retracement. Price is just staying in the box. And most likely, if you're trying to use Fibonacci in this structure, you're gonna lose money and you're gonna say like, okay, Fibonacci don't work. But the reality is you just don't know how to use it. So you need to absolutely wait for price to be bullish or bearish. Now, the question kind of arises is, how do we measure the retracement? That's a good question. And that's exactly what I'm about to get into. How do you measure the retracement? Hold on. Let me clean this up real quick. All right. So when you're using your Fibonacci retracement tool, there is something that we call golden levels. All right. So something that we call golden levels. And these levels are the ones that we're gonna be looking at to see, okay, how far price is going to retrace. Because when you're using your Fibonacci retracement tool, you're gonna have your point A, which we also call the swing low, and that's 100%. And we're gonna have your point B, which we call the swing high. And in the middle, this is your 0%. And in the middle, you're gonna have your golden zone. You're gonna have the first golden zone is 38.20%, and the second golden zone is 50%, and the last one is 61.80%. And these are what we call golden zones or levels. You can call it golden zones or golden levels. So these are the levels that we're gonna be monitoring, we're gonna be looking at whenever price is bullish or bearish. If price is channeling, price is consolidating, there is no way to measure anything because price is not trending. So when price is, let's say price is bullish and price do this. Now, this is a big push up. Now you're gonna need to know how far price is gonna retrace back so that you can catch the next leg up, because as Fibonacci users, we trade with the trend, right? If you're using Fibonacci, you need to know, okay, I need to trade with the trend. If you're a scalper on the lower time frame, you can still use it, but most likely the traders who use Fibonacci, they always trade with the trend. So if price retraces back to 38.20, you're gonna be like, okay, is this a good level for me to buy? Because as I said, Fibonacci not alone is not gonna make you profitable. You need other confluences that will reinforce your Fibonacci level, and that's where area of interest comes into play. So if price retraces back to 38.20 and you have a strong area of interest at this level, you're gonna be like, okay, this is very interesting because we have the 38.20%, this right here, plus we have a strong area of interest. By the way, an area of interest is the level of orders where buyers and sellers may come back to interact with each other. This is a strong level. That's the definition of an area of interest. Some people call it support and resistance, fair value gap. They give it all type of names, but I keep it simple, area of interest. So once you have your Fibonacci retracement tool and you see that the 38.20 aligns perfectly with your area of interest, that's when you're gonna be like, okay, this is interesting and this is a good setup. And you can take the setup, and I'm telling you, 5 times out of 10, even higher than that, 6, 7 times out of 10, you're gonna win this trade. You don't need to have a 100% win rate. If you can win 5, 6 out of 10 with a good risk to reward ratio, you're gonna be massively profitable. And let's say you didn't have an area of interest at the 38.20 and price keeps going down, right? And then you see at this level, that's where you have the area of interest. Then that's where you're gonna take the trade, because you don't take the trade just because of the 38.20 or the 50% or the 68.20. These are just levels. But price action is king, as you may already know. Price action is king. Even if Fibonacci is a very important tool and sometimes very accurate, but you need to know the other confluences that you need in order to reinforce your Fibonacci levels. And when price retraces back to the 50%, you can enter the trade at this level and then you target the 0%. Boom. That could be your target, or you can target the next higher, and then you take your profit and you are out of the market. So that's how I use my Fibonacci retracement tool, and I can show you in my journal Fibonacci. Most of my winning trades, they always have Fibonacci retracement, either the 38.20, the 50, or the 68.80. The win rate for the 38.20 at some point was 70%. Was 70%, y'all. That's crazy. If you ask me, I'll tell you that's crazy. So as I said, that's how I use my Fibonacci retracement tool. And if you guys want to learn more about Fibonacci and how I do apply my Fibs levels to my charts, subscribe to this channel and give me a like, and I'll show you how I do it live when I'm trading with my students. So with that being said, thank you guys for watching. Subscribe if you found value from this video, and I see you in the next one.